Okay, so firstly, Aspire Mining holds two mining tenements in Mongolia, the Ovoot Project and the Nuurstei Project. The Ovoot Project is our premier deposit. Both of these projects are located in the north of Mongolia, so up here in the northwest, whereas most of the coal mining in Mongolia is in the South Gobi region. These projects are effectively greenfields deposits, and the Ovoot Project has a total JORC resource of about 280 million tonnes and JORC reserve of 190 million tonnes. So what is a fat coking coal? It's something that's not really talked about in the Australian industry. Here in Australia, normally it's just hard coking coal, semi-soft coking coal, maybe a PCI coal. But a fat coking coal is something that's defined under Chinese, Russian and other Asian standards. And the fat coal is actually quite unique. We had some marketing samples put together from a drilling program that we did in Q4 2022. Sent this down to China, had it tested in laboratories that the Chinese customers will respect. We had the sample results analysed by an independent group, and they've come back and told us that it's a FM36 metabituminous coal, which is colloquially called a fat coal. And what this coal is actually used for is to include into coke blends to enable the coke producers to use other more readily available and cheaper coking coals to produce still a first-class coke. The main parameters that make it interesting to the coke producers, without wanting to bore you too much, is the wide plastic range, high dilatation. And in layperson's terms, what this means is, if we used an analogy like a concrete, the Ovoot coal will be the cement in the concrete, and all the other coals can be the aggregate. And that Ovoot coal, the fat coal, allows all the other coals to blend very nicely together, very completely, and it creates a very strong coke. One other thing I want to touch on today is about the pricing for fat coal and also the pricing for Mongolian coal. I see in the media here in Australia that often there's some doubt cast as to whether Mongolian coals achieve pricing similar to the seaborne market. Generally on this slide, what you can see, there's an Australian premium hard coking coal index. There's a Mongolian premium hard coking coal index shown here. Both of these represent sales in Tianjin, China. And then in between that, there is a fat coal index, a Kaluan coal. And this is index is based on sales in Hebei, which is obviously adjacent to Tianjin. So what this is showing is that at the similar point of sale, fat coals are typically trading at same pricing as a hard coking coal, and Mongolian coals are receiving similar pricing to the traditional seaborne coals coming into China. So the Ovoot project has been on the drawing boards for quite a while now. Some of you will be familiar with this stock over many years. In recent years, there's been quite a lot of progress made in actually bringing the Ovoot Coking Coal Project into fruition. Since 2002, we've finalised studies with regard to the coal handling and preparation plant, the Erdenet rail terminal that we're planning to ship coal through, a road that we're building between the mine and that rail terminal, and we've done infill exploration drilling to firm up both the reserve estimate but also to provide enough definition around where we're planning to start mining from. This year we are finalising the last of the major permits and approvals that we need to actually kickstart the project. The main things that are outstanding now are detailed environmental impact assessment with regard to the wash plant and the road, and also the detailed design to then go and construct the road. Within this quarter, like literally within the next 2 weeks, we're expecting to have those last 3 major approvals in hand, and that'll form the basis for raising finance to construct the project. But we've already had quite extensive discussion with vendors, contractors, other lending institutions with regard to the project financing. But the key thing is to have the government permissions in place to allow us to actually go and construct. And with those in hand, we're expecting that those arrangements will be finalised fairly quickly, and we're looking to move into construction within Q3, and that would extend through all the next year, and we'll be in production looking to market coal to customers in late Q4 2025. So coking coal, or coal in general, I guess, has been not the most flavourful market sector for a while, but realistically, the demand for coking coal is not going away. At a fairly conservative 2% compound annual growth rate between effectively now and 2050, we're going to see a 70% increase in demand for coking coal globally. China is responsible for more than 50% of crude steel production in the world, and we're targeting principally the northeast of China for sending product to, and we're fortunate that we have multiple paths to market there. So just a little bit of an overview of us, our corporate makeup. Importantly for us, we have a large holding from a very successful Mongolian business person. He bought into the company in 2018, 2019, and for us it's very important that we're seen in country as having Mongolian ownership and Mongolian management. This is helping a lot to deal with the government to obtain the permissions and approvals that we need. We're currently sitting with a market cap of just short of 100 million Australian dollars, and with no debt and roughly 17 million US in the bank as the end of 2023, we're in a pretty good position, we think, to bring this project to fruition. Now I'd just like to explain where I see the upside case for Aspire Mining, and I'd just like to draw a parallel to a company called Mongolian Mining Corporation, who I used to work for. Mongolian Mining Corporation is a Hong Kong-listed coal producer. They're operating in Mongolia. They own the Urkhon-Selenge and Erdenet coal mines. The Urkhon-Selenge deposit is their main asset, and it is actually of a similar size in terms of JORC Reserve compared to the Ovoot Project. Over roughly the past year, as coal prices have been relatively good, but probably more importantly, the logistics into China have freed up post-COVID, Mongolian Mining Corporation have added $1.6 billion to their market cap, and they're doing it in a way that we're looking to emulate. MMC have control over their mining, processing, transportation, so they offer an end-to-end solution to get washed premium hard coking coal to their customers. This is something we're looking to do too, but there are some positive differences between our two companies. Firstly, in terms of the resource, the MMC Orkhon-Selenge resource, whilst it's of similar size to the Aspire Ovoot project, it's actually approximately 1/3 hard coking, 1/3 semi-soft and 1/3 thermal coal. To date, the thermal coal has not had any viable market to send it to, but this is also optically reducing their stripping ratio on their deposit. So their life of mine stripping ratio is about 5.5 to 1, whereas our long-term stripping ratio is slightly higher at around 7 to 1. However, our project has in excess of 95% fat coking coal in its reserve base. Additionally to that, the MMC yield from the Urkhon-Selenge deposit is around 50 to 55%, whereas we're expecting above 80% yield for our primary product. Overall, the product stripping ratio comparing the two deposits is much better in favour of Ovoot. Also, MMC has been to date the only coal mining operation in Mongolia where there's been a really strong focus on the ESG principles required. And we are looking to emulate that. We've seen what they've done to obtain their permission to operate in the community and contribute to Mongolian society, and we're quite focused on that as well. So I think if we are obtaining our approvals, locking in our financing, moving into construction, we'll start to see some value unlocked from the Ovoot project. I'd just like to briefly touch on some of the changes to the board and management that have occurred over the past roughly 18 months. In particular, Michael Avery's been appointed as chairman of the company, and Russell Taylor has joined as a non-executive director. Both of these gentlemen have got strong experience in Mongolia, developing coal projects, both in Mongolia, Australia and elsewhere. Archid Dean is the managing director, and Bolbada, who have had quite successful careers in Mongolia in the investment space and dealing with government on multiple levels. Our presence on the ground and our understanding in Mongolia is actually critical to making sure this project moves ahead. And just lastly, touching on our, our commitment to community and environment in Mongolia. I think without wanting to cast shade on previous management, this was a shortcoming of the company from, say, 2010 through to 2020, and it was really due to not having enough on-the-ground presence in the country. But with strong involvement from Mongolian citizens in the board, the majority shareholder, and having experienced management and directors who've operated in Mongolia previously, we've been working hard the last few years to ensure that we gain the social licence to operate.
Brilliant. Thank you, Sam. Love that slide on the comparison with MMC. So exciting times ahead. Does anyone have a question for Sam?
Thank you, Danica. Thanks, Sam. I think anyone that's roughly familiar with the Spire knows that the Ovoot project is world-class, but so the question is not really, in my mind, the saleability of the coal or whether or not you're going to make money out of it. That's clear. It's just the logistics, and so the logistics is pretty complex. So maybe you can just explain that a little bit closer, and also the path to permitting as well, because I think those are the two keys to unlocking value here, from what I can tell.
Can we go back a few slides? Yeah, keep going back. Keep going. Wait. So I said Matt. One more. Yep, that's it. Okay, so it's true that logistics is a little bit more complicated than, say, MMC. We're located here. We're looking to build a road from Ovoot. Nearby to Nuurstei, there's a town called Morin, and then from Morin to Erdenet there's an existing public road. It's a 600-kilometre journey, one way, and I guess similar to the last presentation, we're looking to implement very efficient and cost-effective truck haulage between those two locations. We're working with the Ministry of Roads and Transportation to introduce A-double combinations, not quite triple or quad road trains, but A-doubles. And we've had Smedley's Engineers, who's a company here in Australia, do simulation and analysis of that route. We've done costing based off that, and we're quite confident that we can very economically transport coal to the railhead. From the railhead in Erdenet, railing it either north or south, there's published rates. I guess historically there's been some congestion on that railway, but that's actually something that's been addressed very proactively by the Mongolian government in the last couple of years. And we've seen much increased throughput through, in particular, the Erdenet port and the development of the Hungi port. And there's also a new port called Project, which will be commissioned before the project kicks into gear.
And just the permitting as well, Sam, like the other slide described the rough sort of the sketch of what needs to be done. Are you able to just go into a little bit more detail in terms of some of the DEIA requirements in order to be able to actually start mining at Ovoot?
Yeah, so at the actual mine site, we have detailed environmental impact assessment approved for mining operation. We actually have everything we need in place to start mining, but one of the requirements of the government is that we have a paved road in place to haul the product. And we're also focused on ensuring that we only sell a washed product to the market and not to confuse customers or initially start with a product that's not quite the right consistent specification. The main approvals still required are for a detailed environmental impact assessment for the wash plant, which has been completed, submitted, and actually next week there's a meeting where we're expecting that to be reviewed and approved. And similarly with the road detailed environmental impact assessment, before the end of March we're expecting a meeting with the relevant government body to go through that. At this stage we don't expect any pushback, any issues. We've consulted with the community along the route extensively, and generally there's quite strong support for this road because it actually aligns with government planned road development, and it's going to be for dual purpose, serving both our interest and the general public.
Thanks very much. Thanks, Danica.
Thank you. Oh, you have a good question? Might pass that.
Thanks, Sam. Louis here. The BFS, how are we going with the BFS? Are we on time?
We are on time at the moment. SRK is working away on updating the resource report and the reserve report, the estimates, and all the inputs into that final independent technical report are on track.
Okay. Something that doesn't get spoken about a lot, but sovereign risk. You've got a good presence there in Mongolia. You've spent a lot of time there. You've got a couple of guys on the board who are very familiar. Big presence now with Mr. T on the ground. I'm sure that's improving relationships with locals as well, which would send you some way on inroads there to getting the roads through multiple provinces. Big capex with the road as well. So what have we got in the bank now? Just over 10 mil Aussie, 7 mil US.
In the bank now, 17 million US.
Yeah. So are we looking for another cap raise as well as financing, or are you going to go just the financing route?
Look, we're definitely trying to raise debt financing. That's a first preference. Discussions so far with the multinational contractors that we've been dealing with, they've got links to finance for that road, debt financing. Of course, all existing shareholders don't want to see more equity being raised, but it's not being discounted as a possibility, but our focus is on debt.
So possibly a mixture of both, mostly finance.
Correct.
Yeah, okay. I think that's it. Thanks, mate. Well done.